On December 8th, 2025, something happened that most of the world completely missed. While you were scrolling through social media, watching the latest viral videos, a group of nations controlling 45% of the global population just launched a financial weapon that could reshape everything you know about money. No press conference, no grand announcement, just a quiet digital launch that sent shockwaves through the corridors of central banks worldwide. They called it the unit. And if you're holding dollars in your bank account right now, you need to understand what this means for your financial future. Picture this: 10 countries, 6,000 tons of gold, a blockchain-based currency backed by precious metal, and a very clear target painted on the back of the US dollar. This isn't conspiracy theory territory anymore. This is happening right now with documented proof, official statements, and a timeline that's accelerating faster than most economists predicted. The question isn't whether the global financial system is changing. The question is whether you'll see it coming before it's too late. Let me take you inside the most secretive financial revolution of our generation, and I promise you, by the time you finish listening to this, you'll never look at your money the same way again. The story actually begins way back in 2018, but nobody was paying attention. While the world obsessed over cryptocurrency bubbles and stock market rallies, the BRICS Business Council quietly launched something called BRICS Pay. Sounds innocent enough, right? Just another payment system. Except this wasn't designed to compete with PayPal or Venmo. This was designed to compete with SWIFT, the messaging system that underpins nearly every international money transfer on the planet. The same SWIFT system that the United States and its allies have weaponized time and time again, freezing countries out of the global financial network whenever it suited their geopolitical interests. Russia learned this lesson the hard way. When Western sanctions cut Russian banks off from SWIFT, it was like cutting off oxygen to a drowning man. Trade ground to a halt. International transactions became nearly impossible. And in that moment of financial suffocation, something crystallized in the minds of leaders across Brazil, Russia, India, China, and South Africa. They realized they were all vulnerable. Every single one of them could be the next target. Every single one of them needed an escape hatch. So they started building one. Fast forward to 2024. And BRICS wasn't just 5 countries anymore. Egypt joined, Ethiopia joined, Indonesia, Iran, and the United Arab Emirates all signed on. Suddenly, this wasn't just an alliance of developing nations. This was a bloc representing 35% of global GDP. These weren't peripheral players in the world economy. These were major engines of global growth, and they were all singing from the same hymn sheet. Reduce dependence on the dollar, build alternative systems, take back financial sovereignty. But here's where it gets really interesting. Anyone can talk about building alternative systems. Talk is cheap. What separates dreamers from doers is execution. And on October 31st, 2025, the world got its first glimpse of actual execution. The BRICS Alliance unveiled a working prototype of something they'd been developing in secret for years. They called it the unit, and its design was nothing short of revolutionary. Imagine a currency that isn't controlled by any single government. Imagine money that derives its value not from the promises of politicians or the printing presses of central banks, but from actual physical gold sitting in vaults. Now imagine that same currency is also balanced by a basket of national currencies, ensuring no single nation can dominate or manipulate it. That's the unit, 40% backed by gold, 60% backed by equal portions of the Brazilian real, Russian ruble, Indian rupee, Chinese yuan, and South African rand. Each currency gets exactly 12% weighting. Nobody gets special privileges. Nobody gets veto power. It's democratic money for an alliance that's tired of dollar hegemony. The technical architecture is equally fascinating. They built it on Cardano blockchain technology, which means every transaction is transparent, traceable, and theoretically immune to the kind of centralized control that governments love to exert over traditional currencies. But here's the crucial detail most people miss. The unit isn't meant to replace your local currency. You're not going to be buying groceries with units. This is a settlement instrument for international trade. When Brazil wants to buy oil from Russia, instead of converting reals to dollars and then dollars to rubles, losing money to exchange fees and exposing themselves to dollar volatility and US sanctions at every step, they can settle the trade directly in units, clean, efficient, dollar-free. The initial pilot was small, just 100 units issued, each one pegged to exactly 1 gram of gold. But even that modest beginning sent a message. This wasn't theoretical anymore. This was real money, backed by real gold, moving through real blockchain infrastructure. And by December 4th, just 1 month after launch, something fascinating happened. Market forces took over. The value fluctuated to 0.9823 grams of gold per unit. Not a collapse, just normal market dynamics proving that this thing actually worked as a functional currency. Now, before you think this is all smooth sailing for BRICS, let me hit you with some reality. The International Research Institute for Advanced Systems developed the unit, and this is crucial, BRICS governments haven't officially adopted it yet. At their summit in Rio in July 2025, BRICS leaders were very careful with their language. They confirmed that no common currency is planned in the near term. Translation? They're testing the waters. They're building the infrastructure. They're proving the concept works. But they're not ready to go all in just yet because they know the retaliation would be swift and severe. And they're right to be cautious because the response from Washington has been exactly as threatening as you'd expect. President Trump didn't mince words. He warned BRICS countries to prepare for 100% tariffs if they continue efforts to reduce the role of the US dollar. 100%. Let that sink in. That's not a negotiating tactic. That's economic warfare. That's the United States essentially saying, use our currency or we'll destroy your economy. But here's the problem with threats like that. They only work if the target actually fears the consequences. And when you're talking about countries that collectively represent 45% of humanity and 35% of global economic output, maybe they've reached a point where they're willing to call that bluff. Because here's what most people don't understand about the dollar's dominance. It's not backed by gold anymore. It hasn't been since 1971 when Nixon ended the Bretton Woods system. The dollar's power comes from inertia, from network effects, from the fact that oil is priced in dollars and international reserves are held in dollars, and everyone uses dollars because everyone else uses dollars. But that's a house of cards built on confidence. And confidence, once lost, is almost impossible to regain. The cracks are already showing. As of November 2025, the US dollar is still used in about 89% of currency exchanges. Still represents 56% of all foreign currency reserves held by central banks worldwide. Those numbers sound dominant, and they are, but they're also down from historical highs. The trend line is pointing in one direction, and it's not up. Meanwhile, the Chinese yuan's share of global forex trades climbed to 8.5% by September 2025. That might not sound like much, but remember, this is happening despite massive US pressure, despite the yuan not being freely convertible, despite all the structural advantages the dollar still enjoys. If the yuan is gaining ground under these conditions, imagine what happens when BRICS Pay goes fully operational and provides the infrastructure for yuan-denominated trade across the entire alliance. Speaking of BRICS Pay, let's talk about the elephant in the room, the payment system that started this whole revolution back in 2018. For years, it existed mostly as a concept, a research project, something academics and technologists were tinkering with in St. Petersburg State University labs. But in 2025 and 2026, things started accelerating. Initially, Russian Foreign Minister Sergei Lavrov said a pilot could appear before the end of 2026. Then Russian Deputy Foreign Minister Sergei Ryabkov walked that back in October 2025, saying the system is now targeted for operational status by 2030. Classic government timeline slippage, right? Except then, in January 2026, reports surfaced that India would propose full BRICS Pay implementation at the upcoming 2026 summit. So what's really happening? Are they behind schedule or ahead of schedule? Here's my read on it. They're managing expectations while racing against the clock. See, building a decentralized payment system that can handle cross-border transactions at scale isn't just a technical challenge. It's a political minefield. You've got to integrate Russia's SPFS system with China, its CIPS system with India, its UPI with Brazil, as PIX. These are completely different architectures built by different teams with different security protocols and different regulatory frameworks. Getting them to talk to each other seamlessly is like trying to get Android and iOS and Windows and Linux to merge into one operating system. Technically possible, but politically nightmarish. Yet somehow they're making progress. The system they've designed claims to reach 20,000 messages per second with minimal hardware requirements. For context, Swift handles about 42 million messages per day, which works out to about 486 messages per second on average. If BRICS Pay can actually deliver 20,000 per second, they're not just building an alternative to Swift. They're building something 40 times more powerful. And they're doing it with a decentralized architecture that is theoretically immune to the kind of sanctions and cutoffs that made Swift a weapon in the first place. But let me tell you what really keeps central bankers up at night. It's not the technology. Technology can be copied, can be countered, can be outspent. What terrifies them is the gold. Remember those 6,000 tons I mentioned earlier? Let me break down exactly what that means. Russia holds 2,336 tons. China holds 2,298 tons. India has 880 tons. These aren't small numbers. These are strategic reserves built up over decades. And between 2020 and 2024, central banks of BRICS member states purchased more than 50% of global gold production. Think about that for a second. While Western central banks were debating interest rates and printing money to fight recessions, BRICS nations were systematically converting their dollar reserves into physical gold. They were preparing. They saw this moment coming years ago and positioned themselves accordingly. Every ton of gold they bought was one less ton available to Western central banks. Every dollar they converted was one less dollar in circulation supporting U.S. government debt. They weren't just building an alternative system. They were undermining the existing system from within. And here's the truly clever part. Gold can't be sanctioned. You can freeze someone's bank account. You can cut them off from SWIFT. You can ban them from bond markets. But you can't make their gold disappear. It sits there in vaults, holding value, giving them optionality. When the unit launched with 40% gold backing, it wasn't just an economic decision. It was a geopolitical statement. We have real assets. We don't need to rely on your paper promises anymore. Now I know what some of you are thinking. This all sounds dramatic, but can BRICS actually pull this off? Don't they have too many internal contradictions? Isn't India skeptical? Doesn't China want to dominate everything? Won't they tear themselves apart before they can challenge the dollar? These are legitimate questions. And honestly, they're the same questions Western analysts have been asking for 15 years while consistently underestimating BRICS at every turn. Yes, there are enormous challenges. India's External Affairs Minister said in March 2025 that there's no policy to replace the dollar, calling it a source of global economic stability. That sounds like a contradiction, right? India's simultaneously building dollar alternatives while praising the dollar's stability. Except it's not a contradiction if you understand the game being played. India doesn't want to publicly antagonize the United States. They need American technology, American investment, American support against China. So publicly, they're dovish. But behind the scenes, they're hedging their bets like everyone else. They're building the infrastructure. They're accumulating the gold. They're preparing for a world where the dollar isn't the only game in town. China presents a different challenge. The yuan is already the dominant BRICS currency, accounting for 8.5% of global forex trades. China has the largest economy in the bloc. They have the most advanced digital currency infrastructure with their digital yuan already in circulation. There's a very real risk that a BRICS currency system just becomes yuan hegemony with extra steps. The other member nations know this. That's why the unit is designed with equal weighting for all currencies. That's why BRICS Pay is decentralized rather than running through Beijing. They're trying to build genuine multipolarity, not just replace one hegemon with another. But here's where it gets really complicated. Even if BRICS has internal divisions, even if the timeline slips, even if only parts of their plan succeed, they're still winning. Because the goal isn't necessarily to replace the dollar tomorrow. The goal is to create viable alternatives that give them leverage. Right now, if the US threatens sanctions, most countries have no choice but to comply because they can't afford to be cut off from the dollar system. But if BRICS Pay exists, if the unit exists, if there's a functional gold-backed settlement system, suddenly countries have options. They can tell Washington, go ahead, sanction us. We'll just trade with the other 45% of humanity instead. That's the real revolution here. Not the technology, not the currency design, the shift in bargaining power. The creation of genuine alternatives in a world that's been dominated by a single reserve currency for 80 years. And the timeline is accelerating faster than anyone expected. The realistic projections from mid-2025 suggested BRICS Pay pilots in 2025 through 2027, a possible settlement unit by 2028 to 2030, and discussions of a unified digital currency only post-2030. Well, we're in early 2026 now, and the unit already launched. BRICS Pay is being proposed for full implementation at the next summit. These aren't pie-in-the-sky predictions anymore. These are operational systems with real money flowing through them. Meanwhile, the geopolitical landscape is shifting in ways that make dollar alternatives more attractive by the day. Western sanctions have expanded dramatically over the past 5 years. It's not just Russia anymore. It's Iran, it's Venezuela, it's various Chinese companies and individuals. The US has discovered that financial sanctions are a powerful weapon, and like any powerful weapon, they've been using it more and more frequently. But every time they use it, they create more incentive for countries to build alternatives. Every frozen bank account is an advertisement for BRICS Pay. Every swift cutoff is a recruiting tool for the unit. There's a concept in evolutionary biology called punctuated equilibrium. Long periods of stability interrupted by rapid bursts of change. That's what we're witnessing in the global financial system right now. For 80 years, dollar dominance was the equilibrium. Everyone understood the rules. Everyone played the game. But the equilibrium is breaking down. The sanctions, the money printing, the weaponization of finance, they've created evolutionary pressure. And BRICS is the mutation that's adapting to the new environment. Now let's talk about what this means for ordinary people. Because this isn't just about central banks and international trade. This affects you personally, even if you never leave your home country, even if you think of yourself as far removed from global finance. If you hold dollars, whether in cash or in bank accounts or in dollar-denominated assets, you need to understand that the value of those dollars depends on continued global demand. When fewer countries need dollars for international trade, when central banks hold less dollars in reserve, when oil exporters start accepting yuan or units instead of dollars, the demand for dollars decreases. And when demand decreases while supply stays constant or increases, basic economics tells you what happens to value. It falls. Now, will the dollar collapse overnight? Almost certainly not. The network effects are too strong. The infrastructure is too entrenched. The US economy is still massive and relatively stable, but a slow decline is very much on the table. A world where the dollar is one of several major reserve currencies rather than the dominant one. A world where holding purely dollar-denominated assets is seen as risky rather than safe. That world is not some distant future possibility. That world is being built right now, transaction by transaction, ton of gold by ton of gold. For Americans specifically, this has profound implications. The US has been able to run massive budget deficits for decades because global demand for dollars meant other countries were willing to buy US government debt at low interest rates. It's called the exorbitant privilege, the ability to borrow cheaply because your currency is the world's reserve currency. But privileges can be revoked. If global dollar demand decreases, interest rates on US debt will have to rise to attract buyers. Higher interest rates mean more expensive government borrowing. More expensive borrowing means either higher taxes or cuts to government services, or more money printing, or some combination of all three. None of those options are pleasant. For people in developing countries, the implications are different, but equally significant. Many emerging market economies have borrowed heavily in dollars. When the dollar is strong, those debts become crushing. When the dollar weakens, those debts become more manageable. A world with multiple reserve currencies could mean more stability, less vulnerability to the policy decisions of a single central bank halfway around the world. It could mean more economic sovereignty, more ability to manage their own monetary policy without worrying about dollar fluctuations. Or it could mean new forms of dependency, just with different masters. The yuan could become just as dominant and just as weaponized as the dollar ever was. The point is, the status quo is changing, and change always creates winners and losers. The technological implications are equally profound. BRICS is pioneering the use of blockchain for sovereign financial infrastructure. Not for speculation or meme coins, but for actual settlement of international trade. If this works, if the unit proves that a gold-backed blockchain currency can handle real-world transaction volumes, it will change how we think about money at a fundamental level. Every country will want their own version. Every trade bloc will start building their own alternatives. We could be looking at a Cambrian explosion of competing currency systems, each with different backing, different governance, different technological architecture. Some economists think this fragmentation would be disastrous. Loss of efficiency, higher transaction costs, more complexity in international trade. Others think it would be liberating. More competition, more innovation, less vulnerability to single points of failure. Honestly, we don't know. We've never lived through a transition like this. The last time the global reserve currency changed was when the dollar replaced the British pound after World War II. And that transition took decades and was managed by countries that had just fought the most destructive war in human history together. This transition isn't being managed. It's happening organically, driven by geopolitical conflict and technological innovation and the accumulated frustration of nations tired of playing by rules they had no part in writing. What we do know is that the old certainties are crumbling. The assumption that the dollar will always be dominant, the assumption that SWIFT is irreplaceable, the assumption that the US can indefinitely weaponize finance without consequences. All of these assumptions are being tested right now, and they're not holding up as well as their defenders hoped. Let's bring this back to the present moment. It's early 2026. The unit is operational, moving real value between real counterparties. BRICS Pay is in advanced testing with operational deployment targeted for within the next few years. 10 countries representing 45% of humanity are coordinating the largest challenge to dollar hegemony since the dollar became the global reserve currency. And they're doing it with a combination of gold reserves, technological innovation, and geopolitical determination that shouldn't be underestimated. The next critical moment is the 2026 BRICS Summit. India is expected to propose full BRICS Pay implementation. If that passes, if all member nations agree to link their payment systems into one integrated network, we're looking at the birth of a truly alternative financial architecture. Not a replacement for the dollar system, at least not immediately, but a genuine alternative that covers billions of people and trillions in trade. Watch what happens with the unit over the next 12 months. Watch how many transactions flow through it. Watch whether more countries want in. Watch whether the gold backing holds stable or if they need to adjust the ratios. Watch whether blockchain infrastructure can handle increasing volume without breaking down. These aren't abstract questions. These are the tests that will determine whether this experiment succeeds or fails. Watch the US response. The pressure on Washington to respond will be enormous. They could try to strengthen the dollar by raising interest rates, but that would crash the stock market and potentially tip the US into recession. They could try to negotiate, offering BRICS nations better terms to stay in the dollar system. But that would be seen as weakness and might embolden other challenges. They could follow through on the tariff threats, but that would hurt American consumers and American businesses just as much as it would hurt BRICS exports. There are no good options, which is exactly why BRICS thinks now is the time to strike. Watch China's role carefully. Beijing has been remarkably restrained about promoting the yuan as a reserve currency, despite having the economic weight to push harder. That restraint might be strategic patience, letting the alliance build the infrastructure, letting other countries do the political heavy lifting. Then stepping in later when the yuan naturally becomes the dominant currency in a multipolar system. Or it might be genuine commitment to multipolarity. Time will tell, and the answer will shape the future of global finance. Here's what I can tell you with certainty. The financial system you've known your entire life, the system built on dollar dominance and swift messaging and U.S. Treasury bonds as the ultimate safe asset, that system is being challenged in ways it's never been challenged before, not by terrorists or hackers or economic cranks, but by major economies with sophisticated financial systems and clear strategic goals. They're not trying to destroy the system overnight. They're building alternatives, creating options, shifting leverage piece by piece. Whether this leads to a more stable multipolar financial world or to chaos and fragmentation, whether it empowers developing nations or just creates new forms of domination, whether the technology works at scale or crashes under the weight of real-world complexity, we're going to find out over the next few years. This isn't a distant threat or a theoretical possibility. This is happening now. The unit launched, BRICS Pay is being implemented, 6,000 tons of gold sit in vaults backing an alternative vision of how global finance should work. The secret isn't secret anymore. The world's financial architecture is being rewired in real time, and most people have no idea it's happening. They're focused on their daily lives, their jobs, their families, while beneath the surface, tectonic plates are shifting. When those shifts reach the surface, when the effects become visible in exchange rates and interest rates and the prices you pay for imported goods, it will feel sudden, but it won't be sudden. It will be the culmination of years of planning, years of gold accumulation, years of technological development, years of geopolitical positioning. The smart money isn't asking whether the financial system will change. The smart money is asking how to position for the change that's already underway. Some are buying gold, figuring that whatever happens, gold will hold value. Some are diversifying into multiple currencies, spreading risk across different systems. Some are watching for opportunities, knowing that periods of transition create winners as well as losers. Some are hoping their governments will protect them, though history suggests that's usually a bad bet. What you do with this information is up to you. Maybe you think I'm overstating the threat, and the dollar will remain dominant for decades to come. That's possible. Predictions about the death of the dollar have been wrong many times before. Maybe you think this is the beginning of the end for American financial hegemony and radical change is imminent. That's also possible. History moves faster than people expect when it finally moves. Maybe you think the truth is somewhere in between, a gradual transition to multipolarity that takes 20 or 30 years to fully play out. That might be the most likely scenario. But whatever you think, whatever your analysis of probabilities and timelines, you can't say you weren't warned. You can't say nobody saw it coming. The signs are everywhere. The unit is operational. BRICS Pay is being implemented. The gold reserves are massive and growing. The political will is there. The technological infrastructure is being built. The timeline is accelerating. On December 8th, 2025, while the world was distracted, something changed. A prototype launched that could reshape global finance. No press conference, no grand announcement. Just a quiet digital deployment of a gold-backed blockchain currency that represents the most serious challenge to dollar dominance in 80 years. This is why you need to look past the headlines and examine the actual developments. Russia has reduced dollar holdings to just 13% of reserves, down from over 60% a decade ago. China has established yuan clearing banks in dozens of countries with currency swap agreements covering over 40 nations. They've built an entire parallel financial infrastructure that most Western analysts did not take seriously until it was operational. India presents the most fascinating case study. They are simultaneously one of America's closest strategic partners and one of the most aggressive BRICS members in building dollar alternatives. When India and Russia conduct trade in rupees and rubles, bypassing the dollar entirely, it doesn't make headlines. This is strategic ambiguity at its finest. UAE and Egypt joined BRICS while maintaining close U.S. relationships. These countries aren't picking sides. They're building optionality, creating leverage, ensuring no single power can dictate terms to them ever again. The technological sophistication deserves attention. The unit isn't just a digital token backed by gold. It's a complex system maintaining real-time valuation based on gold prices, currency fluctuations, and market demand. The blockchain infrastructure handles secure transactions across multiple jurisdictions with different regulatory frameworks. The custody arrangements for physical gold backing must be transparent enough to maintain trust, but secure enough to prevent theft or seizure. BRICS-Pay's architecture is equally impressive. They're creating a messaging system interfacing with payment systems never designed to work together. India's UPI processes over 10 billion transactions monthly. China's CIPS handled over 80 trillion yuan in 2024. Getting these systems to communicate seamlessly, settle transactions in real time, handle currency conversions, maintain security. This is engineering on par with building a new internet protocol. And they're succeeding, targeting 20,000 messages per second, using efficient consensus mechanisms optimized for central bank use. Here's something else that doesn't get discussed enough. The geopolitical window for BRICS to make this move might be closing. Right now, the United States is dealing with internal divisions, high debt levels, and strategic overextension. Europe faces economic challenges and is less willing to automatically support U.S. financial policies. This creates space for alternatives to emerge, but that space might not last. If the U.S. economy rebounds strongly, if political unity returns, the opportunity to challenge dollar dominance could evaporate. BRICS knows this. That's why the timeline is accelerating. The addition of 10 partner countries in 2025 was strategic. Malaysia, Thailand, Vietnam, Nigeria, Belarus, Bolivia, Cuba, Kazakhstan, Uganda, and Uzbekistan aren't full members yet, but they're in the ecosystem, testing BRICS financial infrastructure, participating in trade settlements, learning the systems. When BRICS Pay goes fully operational, these nations will already be integrated and ready. It's like building a network effect before the network officially launches. The commodities markets are another area where this could have massive impact. Oil, gold, and most major commodities are priced in dollars. This creates artificial demand for dollars even among countries that don't like U.S. policies. But BRICS countries collectively control enormous commodity resources. Russia has oil and gas, Brazil has iron ore and agriculture, South Africa has platinum and minerals, China is the world's largest commodity consumer. If they start pricing commodities in units or yuan, the petrodollar system that has underpinned dollar dominance for 50 years could unravel. Saudi Arabia watching all this is particularly interesting. They're not a BRICS member yet, but they've done yuan-denominated oil deals with China and been diversifying reserves. If Saudi Arabia joined BRICS or started using BRICS payment systems for oil sales, that would be seismic. The petrodollar wouldn't die immediately, but its days would clearly be numbered. Now let's talk about timeline, because this is where people get confused. They think it's either happening tomorrow or never. Reality is more nuanced. The unit launched in December 2025 as a prototype with limited circulation. BRICS Pay targets operational status by 2030, but pilots are happening now. A full BRICS digital currency might not arrive until the mid-2030s, but infrastructure is being built today. The realistic scenario looks like this. Over the next 2 to 3 years, BRICS Pay pilots expand and more trade flows through alternative channels. The unit gains credibility and more countries hold it in reserves. By the late 2020s, maybe 30 to 40% of BRICS internal trade settles in alternative currencies. By the early 2030s, other regional blocs create their own currency systems inspired by BRICS. By the mid-2030s, the dollar is still the largest reserve currency, but no longer overwhelmingly dominant, perhaps representing 30 to 40% of global reserves instead of 56%. That shift would represent the biggest change in global monetary architecture since World War II. And once that shift starts, it could accelerate quickly. Currency dominance has network effects. Everyone uses dollars because everyone else uses dollars. But network effects work in reverse too. Once enough countries use alternatives, the advantages of holding dollars decrease, more countries switch, advantages decrease further. It's a feedback loop that could unwind faster than anyone expects. The potential flashpoint is what happens during the next major financial crisis. In previous crises, everyone fled to the dollar as the ultimate safe haven. But what if the next crisis stems from U.S. financial mismanagement, a debt crisis or banking crisis that makes people question dollar stability? In that scenario, having alternatives like the unit could completely change crisis dynamics. Instead of buying dollars and treasury bonds, maybe they buy golden units, park money in yuan, or BRICS currency baskets. That kind of shift would permanently alter the global financial landscape. The average person might wonder why they should care about central bank reserves and international payment systems. Here's why. When the dollar is dominant, the U.S. can borrow cheaply because there's always demand for dollars. That cheap borrowing has funded Social Security, Medicare, defense, infrastructure. If dollar dominance fades, borrowing costs rise, and tough choices emerge about what government can afford. Higher taxes or reduced services or more inflation. Those choices affect every American directly. For the rest of the world, reduced dollar dominance could mean liberation from U.S. monetary policy. Right now, when the Federal Reserve raises rates to fight U.S. inflation, it triggers capital flight from emerging markets, currency crises, economic pain in countries that had nothing to do with causing that inflation. In a multipolar currency world, those countries would have more control over their own monetary destiny, setting policies based on their own needs rather than reacting to Washington. That's a powerful motivator for joining alternative systems. Now you understand what's really happening inside BRICS' new money system. This isn't a conspiracy. This isn't speculation. This is documented operational infrastructure backed by 6,000 tons of gold and the collective will of nations representing 45% of humanity. The unit is real. BRICS pay is being implemented. The timeline is accelerating. The geopolitical will is there. The technological capability exists. The economic incentives are aligned. The question isn't whether the global financial system will change. The question is how fast, how disruptive, and whether you'll be ready when it does. December 8th, 2025 marked a turning point that most people missed. But you didn't miss it. You know what's happening. You understand the forces in motion. You have seen inside the system that's being built in real time to challenge the dollar's 80-year reign. Now the question is, what are you going to do about it?